Understanding how your investments grow can be daunting, but the Rule of 72 simplifies the math. It's a quick way to estimate how long it will take for your money to double with compound interest. The formula is simple. Divide 70 by your annual return rate. For example, if your investment earns 8% annually, divide 70 by 8 and you'll find it takes approximately 9 years to double your money. This rule works because it's based on the principles of exponential growth, making it a handy shortcut for both beginners and seasoned investors. The Rule of 72 applies to any rate of return, from stock market investments to savings accounts. If your portfolio averages 6% growth, your money doubles in about 12 years. If it's 12%, you're looking at 6 years. It even highlights the power of compounding over time. The higher your return, the faster you reach your financial goals. But it's not just about investments. This rule also works in reverse. Want to know how inflation erodes your purchasing power? Divide 72 by the inflation rate. At 3%, your money's value halves in about 24 years. The beauty of the Rule of 72 is its simplicity and versatility. It gives you a clear sense of how your financial decisions today shape your future wealth. Whether you're investing for retirement, saving for a goal, or planning for inflation, this rule keeps you focused on the long-term power of compounding. While it's not exact, factors like taxes, fees, and market volatility play a role. It's an excellent tool for quick, back-of-the-envelope calculations. Start using the Rule of 72 to map out your investment journey. With just a little math, you can unlock insights that will help you grow your wealth and make smarter financial decisions. Small changes today can lead to big rewards tomorrow, and this simple rule is the key to understanding how it all adds up.